issue the tariffs right there for February 1st. We'll have to wait and
tariff news here. I've got so basically what I did is sold the market. Now we're short here. Trump had said something about tariffs, and I was kind of following.
Find out, but Reuters reporting that on the veracity and the accuracy
so my game plan
of this statement as of right now.
Going into this year is if we see any big shocks, then I kind of want to be in early and I want to trade small. So, getting into a trade fairly early that might end up being a much larger move down. So we'd heard there's going to be reciprocal tariffs. So got short here, and I'm going to try to get a move down to 6,000. So I'm going to pause this and try to figure out exactly what the full information was on the news. So I actually had 2 orders here. You can see I had sold on the way down. I just hit sell the market, and then immediately I got the 5 points of profit. So my bracket order went in, and then immediately it got 5 points of profit. But I didn't want to actually be out of the trade. I wanted to be holding it for a longer short. So then I sold in the market again, and now that's what the trade that we're in now. So you can see after this bear bar closed, got a fairly deep pullback with this strong bull bar. Possibly all that this is just a 50% pullback, and then we might get continuation here, maybe a second leg down, and we might get a measured move of some sort, like based off of the size of this bar, and maybe that would put us somewhere down here. So we will we'll probably wait a couple more bars and see how the market reacts. With this big bear bar, a lot of people probably traded it like I did, and they're selling, they sold the close. We'll have to see. Do people that sold this close and sold more higher, are they going to exit, break even here, and then the bears are done, or are they going to be holding their shorts and betting the market's going to go lower? So this, how it bounces here will tell us a lot. So this is where I want to see how it reacts. We have this bear bar, and this would act as a first entry short for this whole bearish move. So strong bear bar, pullback. This is the first entry short. Now our bears here that sub below that, are they going to be able to make money easily, or are they going to struggle? So we'll see how this pullback plays out. See if maybe there's a second entry somewhere up higher, and then see how that works. One of the levels I'm looking at is this as being the breakout point. You can tell we had a sort of a double bottom or a triple bottom through here. And now, can this gap stay open? Maybe the market will pull back here and it'll test this level, but can the market stay below this? And if so, then we could probably expect at least a test back down to this close. But if it breaks up higher than that, then this might just end up being a bear trap. So this is the news. Trump told lawmakers he plans to announce reciprocal tariffs as early as today. So, tariffs are bearish, and if Trump is saying he'll be announcing tariffs, well, that is bearish for the market. And the tariffs that would be imposed are equal to the rates that trading partners impose on American exports. So whatever tariffs are against us now, it looks like he could be adding reciprocal tariffs. So, if you remember back in like the 2016, 2017, there were fears of trade wars and tariff wars, and we're kind of getting into that here. Except, from what I remember, this is much more aggressive than it was then. Then it was just fears of tariffs. Now, we really are imposing tariffs and having tariffs imposed. So, so we'll see if he does in fact, actually put on reciprocal tariffs today. And if he doesn't, will that actually be bullish for the market? Because this little move down, this is pricing in that there's going to be tariffs. And if he, in fact, for some reason changes his mind today, then, the market would go up. But this is a sign that he's serious about tariffs, and that he will be using it as one of the tools. And some countries they're going to fight back. They're not going to, just accept tariffs. They're going to be placing more on as well. We could definitely see some countries like teaming up, China and Brazil, just as an idea. They might, say, hey, we're going to put on tariffs to kind of team up on the United States. So, that's a possible outcome. And that would be bearish for the market. So, that's kind of what is being priced in here. That's why you see like this sudden shock. Because if tariffs are going to become on aggressively, then the market is going to be much lower than where it is right now. So people, the algorithms, the computers, they're getting that early start, and they're, just selling the market right when that news comes out. And if they're wrong, they'll, take a small loss. But if they're right, then they're going to be able to buy back much lower than where the market is right now. So lots of overlap. The market is clearly indecisive. But we do have double top, and the second entry short has triggered now. So it seems to me like the market should start heading down soon. And if it doesn't, then that could be a problem. But, look at these 5 bars. It's like a zebra pattern. All these are large bars, and they're completely overlapping the previous one. So, to me, we're probably going to be in a trading range for a bit here. And it's kind of getting indecisive on where the market could be going. So market's testing this support resistance level like we're talking about. Possibly getting a wedge here. First push, pull back second, pull back third push. Wedge pattern here. A problem with, one thing that I will admit a problem with selling is that we've had so many bear traps lately. Just look at yesterday. Big sell-off, but quickly bought. Then big sell-off and was, bought on the same bar right there. Big sell-off here, bought. Sell-off on the open was quickly bought. Then this whole day, big gap down, and was bought. So any strong sell-offs we've been having, they've been bought. The market, I feel like, continues to have news that is, not bullish. Tariff news is bearish. I feel like there's a lot of concerns that should be bearish for the market, but every time we dip, it gets bought. So that is a challenge for the bears. The market's going to go down at some point, but until it does, they potentially might lose a lot on continuing to bet that these bear breakouts are going to work. And then that definitely could be something to keep in mind if you're in a market where sell-offs are being bought. Then you don't want to bet on sell-offs. Let me look at the daily chart. Look at the daily chart for the last, the last 10 years. Any sell-off. Of course, my chart doesn't go back 10 years, but I just talk about what we have here. That's the daily chart. Big sell-off here. A V bottom, quickly bought. Sell-off, it was bought. Sell-off, bought. Sell-off, bought. Bad FOMC news, got sold off. Reversed almost the entire move back. Then here, we did go all the way back up. So, we're in a market that is resilient, and it will continue to be so until it's not. So the bears, at this point, they're hoping that this is some sort of double top, that this is some sort of wedge, that this is a breakout test of this level here, and then that we're going to have a bigger second leg down. So that's what the bears are hoping for here. So looking at the daily chart, I definitely think the market is going to get bit at some point. We've been so strong for so long, and I know there's AI, quantum computing, There's all sorts of advancements that are going on that continue to push the market up. Everyone that's, everyone that has a job and, part of the money they earn is going right into the S&P 500. So many people are taught to just buy every week a little bit of the S&P 500. So there's always this slow creep of money going into it. But I think at some point over the next, could be this month, could be a year from now or two, the market's going to get bit. We're going to come back and test this low way down here. I mean, the market's been so overbought for so long. I'm not just talking about this chart. I'm talking about, since, 2015. What was the S&P? What was the price in 2015? Like 2,000, and we're 3 times that, just, 9 years later. Or the COVID lows were, I think, low 2000s. And so 4 or 5 years later, we're 3 times the price. I don't know. It's just too much. So, am I thinking like a big collapse? No, but I'm thinking like a bigger trading range over, maybe the last couple years, where the market goes, instead of every sell-off being bought and then continuing higher, I could see the sell-off, then it's bought, and then another sell-off, and you kind of go sideways, kind of like how we're looking here. But, instead of it lasting a few months, I would imagine it lasting a couple years, just so the market can just so the real earnings can catch up to the price. So this bear bar closed, and the bears, like I said, they have different things they can look at. They have a wedge, they have a micro double top, they have a breakout test. And I think it's important that it held below the moving averages here. So we have the 20 and the 200. And the market was able to stay below those. We didn't have any closes above. Not saying it would have been the end if there was a close above, but it's important that they were able to have this formation where you had this double top and, pretty quickly bounced off of that. Compared to over here, where tested the 200 moving average and bounced, tested it and bounced, tested it and, bounced and went sideways here. Versus now, we have the strong close way below the moving averages and below these lows. And then we retested it. We retested the 200 moving average and got a double top. And, now it looks like bears are starting to sell again. So, this is something you'll see sometimes where there's a strong leg, and then the market will, instead of going down immediately, it'll kind of pull back for a little bit. Bears will pause on selling, and they'll wait until the bulls make several attempts go higher. And then when they see that the bulls are struggling to really push the market up, then the bears will start selling again, and they'll push it down. Let me see if I can find an example. I know we had. So this is kind of an example in the opposite direction. Strong bull breakout, these 3 bars. And instead of the market just going straight up and testing like this close and getting measure move up. So instead of doing this immediately, it went sideways for several days and then finally got it over here. So, sometimes after a big move, you will get a sideways move, and then, you can see the bears were trying to go down here several times, and then they were failing. Then the bulls they can sense that, and then they start hopping in, betting on that this second leg will come true. So that's kind of where we're at here. Look at all these attempts up by the bulls. 3 attempts up, and like I said, it was failing at this critical level. So now the bears are going to make another attempt to go down. So, at this point, of course, I'm hoping the market will come down here. I'm not sure how the trade's going to end up. I'm not sure if we're going to have to end up closing at break even. We'll just have to have more bars and see. But where is my target? Well, you can see I have this measured move drawn in. That's based on the whole range of this breakout bar. Now, I think I'm going to leave my target at this price, 6,001.5. And basically I'm doing that just because it's right above the 6,000 level. 6,000, big round number. It's an important number. The market will probably want to test that, especially considering it's been a few days since it tested it. So, I think it's reasonable to put my profit order beyond this measured move and try to get it right at that 6,000 big round number. One thing that makes trading the news difficult, or trading macroeconomic events difficult, is that there's so much going on. So, we basically took this short based on the tariff news. And then at the same time, oil, this article is thinking that oil might have a drop because we're headed somewhere here. The trade war and the potential for it to spread has stoked concerns that crude demand may falter and lead to a glut later in the year. So, this article is saying that based on tariffs, that oil prices might go down. And if oil prices go down, well, that's good for the economy. Things cost less to transport everything. So that would be better for the stock market. So, you always have these conflicting pieces coming out, and it just makes trading off of fundamentals is difficult. I mean, all trading is difficult, but I think you really have to. You really have to be full time and really understand the macroeconomics at a deep level to really be able to make money off of that. I actually would say it's easier to make money just off of reading the charts and just trading price action, and never look at the news. Just make sure you're not trading during big news events. Like, if the FOMC comes out, make sure you're not trading right at that time. So I think it'd be easier to make money just trading pure price action instead of chasing the news and trying to understand every little piece that's going on in the economy. Big hedge funds, do that or claim to try to do that. And the reality is most of them don't even outperform the S&P 500. The market's trying to push lower. It's clearly coming into a lot of support right at these lows. Possibly you could look at this as kind of a head and shoulders top. So left shoulder.
Connection head, lost.
And then right shoulder. And so that'd be that whole pattern would be an attempt by the bulls to go higher, and then they'd be failing if that does end up being a head and shoulders top. But I think the critical piece here is that we double topped at this resistance here. Any time that I can draw in a line from previous lows and the market comes back up and tests it, especially like a double top like this, then that's really a sign to me that the market has lower prices to go. So we'll have to see. The Trump news was interesting because he told lawmakers that he would be making the call. He'd be making the announcement in the future. He didn't come. He hasn't made the announcement yet. He just said he would make the announcement, and that announcement might happen today. So I understand why there's this hesitation, because the announcement hasn't been made. It's just been said that the announcement would happen, and there's a chance that might not happen. I could definitely see in his strategy of him saying, lawmakers, I'm going to be putting on these reciprocal tariffs I'm gonna make the announcement soon, and then that word gets out, and then whatever countries he's targeting, whatever his goal is, those countries might back down from whatever they were doing, or they might agree to whatever his previous requests were. So it might just be a strategy by him to get something done, and it's kind of a bluff. He's not actually want to put the tariffs on. He's just using this to try to get something done. So that might be the case as well. And if that is, and then if he doesn't put tariffs on, then that would be bullish for the market. But I understand the market's hesitation here. So the bears managed to break below this prior low, kind of stalling here a bit at that low. But what the bears have, they do have a fairly tight channel down. I mean, they've had about 10 bars without too much of a pullback. I mean, it had a bull bar here, but it's only gone above a prior high once, which was right here. So fairly consistent buying, fairly consistent selling by the bears to move the market down like this. Could this possibly be a double bottom? And then the market would come back up and test up here. Yes, that could. I do think it's good for the bears that they at least got below the prior low instead of being stuck somewhere up here. So like when the market had pulled back, it could have gotten stuck somewhere up here. And then to me, that would have been a better sign that the bulls were in more control and then would have pushed it up. But now, like I said, the bears have had these 10 bars down without much buying. So to me, that's probably at least going to be in a trading range. I think, the odds of a bull trend breaking out above up here are less. So market had a decent attempt to reverse this bear move, but ended in a wedge top and a double top. You can draw a wedge, something like this, and the double top clearly right there. And also it held below the 200 moving average. It also held below this breakout point, which really I think is the most critical part of all this. Right? We have these lows in here, and here. Breaks out strongly. And then on this pullback, it got stopped there. And often this will happen after a breakout. It'll test it. And then we can see here, this bull move was trying to come up and test this again, but it failed. It couldn't even get above the moving average here. So, the bears did what they needed. They create a double top. That's a lower high, but below the moving average. And now they've gotten 4 strong bars and just one small pullback. So they're doing what they need to do. And 2 hours in the day, so I'll plan on getting out before the close. So we'll see if they can continue to push that down. Not sure when Trump is planning to make the announcement about reciprocal tariffs, but if it does happen before the close, then I'm sure that would push the market lower. So I'm going to go ahead and move my stop here. And, what this is doing, it's locking in a little bit of profit. And I want to be out of the trade before 4 o'clock, before the end of the day. I'm not wanting to hold this over the weekend. So, if we get lower so basically I want to get out of this before 4 o'clock. So whatever it does, if it comes up and I'll get stopped out, that's okay. If it goes lower, I'll exit it before 4. So there's a chance that this will be a failed breakout of this low. This could become a double bottom here. We don't know yet. We need a few more bars. Could be double bottom. And it's a failed breakout of this low. So we draw our line in there. We have this low, then failed breakout here. We're not sure yet. That's what it could become. Then if it does, and we rally into the close, I'd rather just get out there. Looking at today was very news driven. And, news can be hard to trade. So on the open, really the only trade that I thought was straightforward today was on the open. So it's this second bar, and two bull bars after a gap up, and both of them are closing above their midpoint, and it's also forming a sort of micro double bottom with these tails. So gap up, market moves down and then closes higher, tries to go down again and then closes higher. And then I think because of that, it's reasonable to buy above, either for a scalp or for a swing trade. There's a chance that this would be the low of the day. So I think a lot of people that bought here will put their stop here and then, go for at least 2 times their risk. And if this is going to be the low of the day, then, market might end up somewhere way up here. So I think that's a reasonable buy. And, you ran into trouble when that 10 o'clock news came out. That was a 35 point bear bar. So, definitely, with the news being so big now, I would try to be out of a trade before the 10 o'clock news like that. Normally, I'm not too worried about the 10 o'clock, but 10 o'clock has been leading to some large moves lately. So let's say I had bought here and I was still in at 10. I'd probably want to take off most of my position and then move it to break even, move my stop to break even. And then, if it keeps on going up, that's fine. But my purpose for doing that would be to avoid something like this. As the market got lower, it started to form some double tops and tests of the moving average. And it always stayed below the moving average. So that's what the bears wanted to see. And a double top here. It's lower than, you could also call this the double top. So a high here. Then either any of these tails would be like the other part of that double top. So either way, multiple double tops here, staying below the moving average. And one bar that I thought would be reasonable to do the opposite was this bar. So recently, a lot of sell-offs have been bought, and a lot of bear setups, like selling below this bar, have done the opposite and reversed. So why might bears want to sell here? Well, it's a second entry short, first entry, and then second entry. And it's following a big bear breakout. So that might get some follow through from that. My thinking when this bar was forming was that a lot of these types of setups lately have failed. And I actually thought it'd be better to actually buy below that bar and put your profit target above. And then, put your stop, put your stop somewhere down here. So basically doing the opposite. And that's the case. That's what happened. So the market went up, and you would have, if you bought down here, you would have gotten your profit above there. This big bar, that is that Trump tariff news that we were talking about. And ever since then, well, for the most part, it did stay below the moving average. Tested it here, got a double top. Tested again, broke through here, but ended up getting a double top at the moving average, and then sold off pretty quickly. And then notice once we were down for a while, the pullback ended up stopping at the moving average. So that's good for the bears. There's a chance this is a double bottom, so I'm just going to go ahead and get out above this bull bar. And
stop filled.
All right, so we're out. So I think I made 75 on that, plus 25 from that earlier trade, and that's all I did today. It's 95. So that's all I did. I didn't take any big trades. I just did a couple things with the micros, and like I said, I didn't really see, it was such a news-driven day. Not too many great setups for me. So today was a pizza money day. Today was just making enough for the pizza. All right. If you guys have any questions, let me know. Enjoy the weekend, and I'll see you guys back on Monday.